Hi guys, welcome back to TipRanks. My name is Annika and here at TipRanks we love to hear what different stocks you're looking at and your opinions on the market sentiment. Today we're looking at two strong buy stocks that are oversold that could be ready for a comeback. Before we jump into this video, guys, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when the TipRanks channel releases a video. Also, guys, I'd like to let you know that TipRanks TV has launched and I've linked it down below in the description box. You guys can watch all our financial content in an ad-free space. I also want to let you know that Julie, Richard and I are hosting a Twitter Spaces on the market news and the stock market on Monday the 7th of March, and this will take place at 11 a.m. Central Time and 5 p.m. GMT. And on the day after that, Julie and I are hosting the Leading Women of Wall Street panel session, and that will be taking place at 11 a.m. Eastern Time and 4 p.m. GMT. Now, without further ado, let's jump into this video. Equity investment advisors will always tell you that timing the market is impossible. And they're right, but timing the market is key to success. Investors need to buy into low prices, but the key to do that is to know when the prices are low. This doesn't mean low in absolute dollar terms, but low relative to stock's recent past performance. So to recognize stocks in the lower price range, we can turn to Wall Street's pros for that help. So the first stock that Wall Street pros deem a buy is Altra Industrial Motion, and its ticker is AIMC. We live in a digital economy and the financial and cyberspace sectors may drive a lot of what happens around us. But the physical world makes demands that we cannot avoid, and this is where Altra Industrial Motion comes in. This company manufactures motion control and power transmission products. They produce these for a wide range of sectors: cranes and hoists, the oil and gas industry, robotics and factory automation, precision motors, and medical and surgical tools. Altra produces a full range of equipment to control speed, torque, positioning, and braking at every scale imaginable. The company actually operates in 17 countries and has over 48 production facilities. The current price for AIMC stock is $41.88. The analyst rating consensus is a strong buy, and the analyst price target is $65, which is a 55.21% upside based on 3 Wall Street analysts offering 12-month price targets. In the most recent quarter of Q4 2021, Altra reported $469.8 million at the top line, flat sequentially but up a modest 3.7% year over year. While sales were slightly up, EPS was down. The reported non-GAAP earnings were at 67 cents per share. These were down almost 12% year over year. But on a positive note, the company also reported a record backlog, indicating high potential for future business, and guided toward a full year 2022 revenue in the range of $2.025 billion to $2.065 billion, which would translate to a 7.6% year-over-year gain at the midpoint. They had a recent couple of organizational moves. Altra has taken action to emphasize its strengths and shed some weaknesses. So the company entered an agreement to sell its JVS, which is the Jacobs Vehicle Systems business, to Cummins for $325 million. This sale price was 40% higher than JVS' share of the 2021 revenues. And in January, Altra completed its acquisition for an undisclosed sum of Nook Industries, a leader in engineered linear motion. Nook showed approximately $42 million in revenue last year. Altra shares have been falling steadily for the past 12 months. The stock is down 32% in that period. But 5-star analyst Brian Blair from Oppenheimer deems it to be a buy with a $67 price target, which is a 60.40% upside. And he says that we believe valuation now excessively discounts Altra's business quality, including the 4th highest EBITDA margins across IMFC coverage, the favorable positioning of its overall portfolio, and the through-the-cycle earnings power of the combined PTT over ANS operations. We view the stock's eye-catching valuation discount as disconnected from fundamentals, highlighting AIMC as a compelling value play. The second stock is Axalta Coating Systems, and its ticker is AXTA. This is another industrial stock in the leisure luxury niche. Axalta is headquartered in Philadelphia, and it has produced and marketed a wide range of color and coating solutions for industrial and consumer use for the past 150 years. The company is particularly noted as provider of automotive coatings, paint jobs, but its full product line includes liquid and powder coatings for vehicles in the commercial, industrial, and agricultural sectors as well. In the past year, Axalta has seen revenues rise. While earnings came under pressure, the company's top line hit $1.14 billion in revenue in Q4 2021, and this was up 6% year over year, and the best result in 2 years. For 2021 as a whole, revenues were reported at $4.42 billion, an 18% gain over the pandemic year of 2020 and indicative of a solid recovery. At the same time that the revenue numbers are up, earnings have been slipping in recent quarters. Q4's 30-cent adjusted EPS was down by almost half from the 58-cent EPS reported in the year-ago quarter. As a result, Axalta's shares are down 20% so far this year. The current price for Axalta Coating Systems is $25.99. The analyst rating consensus is a strong buy based on 9 ratings, 7 a buy and 2 a hold. The analyst price target is $35.56, which is a 36.82% upside based on 9 Wall Street analysts offering 12-month price targets for Axalta Coating Systems. But all might not be gloom for this industrial paint company. In fact, BMO analyst John McNulty writes that conservative expectations and estimates, pricing accelerating while raw materials level, and continued strength in its end markets have Axalta poised to deliver in the near term. With a thin valuation, this execution should yield solid upside in the stock and help Axalta to break out of the perpetual upper $20 low and $30 range it has held for the last 5 years. The risk to reward remains one of the most compelling in the sector. So guys, those are the 2 strong buy stocks that analysts deem a buy that may be wildly oversold and may be a good time to buy. Remember, this is not financial advice. Make sure you do your own research before you invest in anything. Also guys, remember we've got TipRanks TV live, and this is where you can watch all our financial content in an ad-free space. So that is linked down below in the description box, and also you should see a little pop-up here with the link included. So yeah guys, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when the TipRanks channel releases a video. Stay tuned also for the Twitter Spaces event that Julie, Richard and I are hosting about market news in the stock market on Monday the 7th coming, and that is linked and detailed in the description box below. And same with the Leading Women in Wall Street workshop that Julie and I are co-hosting on Tuesday the 8th of March. Thank you guys for watching, and I'll see you in the next video. Bye!